Welcome. In this demonstration, we will highlight how easy it is to invest alongside the world's leading banks. As you could see, similar to the billionaires where we start off with highest by net worth, we started with the investment banks asset under management. BlackRock 8.6 trillion, Vanguard 7.1 trillion US, Fidelity, State Street, JP Morgan, and to name a few, Morgan Stanley, Bank of America. In this example, of course, once you understand how to use the billionaires, meaning you click their profile, you read about them, etc., the same thing applies for the banks. However, with the banks, their portfolio is structured differently. You will realize that they are a little bit conservative in terms of where they invest in, but the principle remains the same. With Bank of America, of course, no technical knowledge whatsoever what to do. So as you could see, they're in the financial service industry, founded in 1956, and their portfolio exposure, they're heavily invested in technology, 56.73%. Okay? Their second largest sector is financial services as well as healthcare. So technology is one of the sectors where the banks heavily invest in. For those who do not know who is Bank of America, we give you basic digestible information to understand this bank. And of course, you could compare that to some of our regional banks here in the Caribbean. Now, you realize there's a mixture of stocks and ETFs inside this portfolio. One, they heavily invest in S&P 500 ETF. A lot of us might not know what that is, okay? I will explain. But the simple principle apply. Stock, market price, holding, percent of value, buy price, shares, P&L, and return. So they've gained 13% on this so far, and the 13% return will be from the average price, from the market price, you get this. So let's dig deeper. For those who don't understand or don't know who is SPDR, you click on the logo, and of course, with the ETFs, you wouldn't get DCF values. DCF values only for stocks, not for ETFs. However, if you click the profile, it will give you basic information that this fund is basically tied to the stock market. The trust achieves its investment objective by holding a portfolio of the common stocks on the New York Stock Exchange, on the S&P 500. So instead of buying an individual stock, if you buy this ETF, you get access to the whole S&P 500, which is the top 500 companies. So this gives you a diversified exposure, okay? So it's an ETF. Same principle apply for iShares. If you click the logo and go to profile, iShares, what it invests in, developed market equities excluding the US and Canada. Okay, the fund invests 90% of its asset in securities, underlying index, etc. All right, you click X, and the same principle apply. Invesco, Vanguard, iShares, Vanguard. So you realize that Bank of America has a mixture of exchange traded funds as well as stocks. You could do the same thing we just highlight with the billionaires. Go to trade. When you click trade, you put the dollar amount. In this example, we're going to put 500. System automatically calculates your shares. You click review order, and then you click confirm. Your trade has been successfully executed. Now, that's it. And the same principle apply if you decided to go to Fidelity, if you decided to go to BlackRock. When the market is open, you will realize everything here is blinking in real time. So the market price within their portfolio is blinking in real time, which will have another demonstration highlighting that. And this is how you invest like a bank or invest alongside the world's leading banks. Thank you.